Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of your hosts for today, and you can see in the New York studio with me is Mark Peterson, who you all know very well, leads the advocacy area for the AICPA. Welcome, Mark.
Thank you, Eric.
And we got Gene Marks, a regular guest, who I'll be introducing more fully shortly. Welcome, Gene.
Thanks, Eric.
Well, it's December 21st. We've been at these town halls now for 4 calendar years. We started in 2020. This is actually the 113th town hall. So in this town hall is going to be no different than the last 112. We're going to be bringing you some of the most recent information, our interpretation, and there's going to be some breaking news today that we're going to share with you from the IRS, as well as some real recent news from FinCEN. So let's get into it. Here's the presenters and the agenda. We're going to kick things off with Mark with a DC and profession update, and then I'm going to have a discussion with Gene Marks on some of the key small business trends. He's going to reflect a little bit on what's happening in Washington and also talk about the outlook for 2024. Then Lisa's going to have a very breaking news type of technical update section, talking about some latest information from the IRS. And then we're going to get into, in greater detail, Mark will talk about it a little bit at the opening, beneficial owner information reporting with our Aon partners, Stan Sturma and Sarah Ferentz. And then we'll close with open forum and closing remarks. So, Mark, let's get into what's going on as we close out this year, and wow,
I know
January and the funding issues.
I know. All right, so let's. We're going to start with funding. They all just left Washington. The Senate just flew home. Gavelled out the year. And as they left, one of the big things that's still on the table is coming back to figure out funding next year, right? They've got a funding resolution that has 2 parts. One part, half of the government would shut down on January 19th. And the second part of that, government could potentially shut down on February 2nd, including the IRS. And I want to talk about that. But let's just talk about the different avenues for them to hopefully figure out these funding issues. One of the things that we think has come together is a top line number of about $1.6 trillion. So that's the White House and the congressional leaders, the Speaker Johnson, as well as the conservative group in the House. So whether that will hold after they all go home to their states and districts, I don't know, but that's where you start. Then after that, what you got to figure out is what's that going to look like? And there are several different options. One is a short-term continuing resolution. We've talked about these continuing resolutions in the past. It's basically kicking a funding can down the road. It's not the appropriations process. Short-term buys you some more time in order to continue to negotiate. However, there is a lot of opposition to what historically has been negotiations that have gone against one side or the other. Right now, there's a lot of opposition to the concept of a short-term continuing resolution, 6 months, 3 months. Sometimes they're 24 hours or 48 hours if they're close to a deal. The other concept is a full year continuing resolution. There's historical precedence for this. It's happened in the past where they've said, we're going to agree on a number, we're going to take our current funding levels, and we're going to push them out for a longer period of time, potentially even a year. Now, if that, in fact, were to happen, and it is a possibility, because of the debt negotiations that occurred this fall between then Speaker McCarthy and the White House, one of the things that was added was a automatic sequestration of 1% for non-defense funding. So if they did a kick the can down the road with a continuing resolution for a year, there would actually be an automatic cut that would come in. Now, that could be appealing to some of the fiscal hawks. The other idea, which is really what the new Speaker Johnson said when he took over and banged the gavel, was regular process. And that means they go through all 12 bills, they figure out the funding levels, they figure out the priorities in those funding levels, and then they send those bills to the Senate. Senate passes them in one shape or form or another, and then they reconcile the differences, and then they go to the White House. Trying to get that done between now and mid-January feels unlikely. Not impossible, but unlikely. So let's talk about January.
Yeah, Mark. I mean, and the thing is, so much has happened. I mean, you just look at where we were in June. We didn't think a funding resolution was going to get passed, and then it got passed, and that was the end of Speaker McCarthy.
Right.
And here we are now, and we thought June of this year was complex. You look at January here, and even that 1% sequester, that's really like a 4% cut. Because everybody's looking to raise their budget.
Right. It's significant. And the word technical is in there. Technically, it's triggered on January 1 if we're still under a continuing resolution. It doesn't actually kick in until April. So they do have a little technical wiggle room. Having said that, you're going to hear a lot about this 1% cut when they come back. Like I said, they believe there is an agreement on a top line number, which is where you start. That could totally fall apart. So they're going to come back from their congressional districts. And then we're also heading into an election year, which means things like the primaries in Iowa and New Hampshire are going to have an effect. One of the things that is also being considered is 2025. So there's going to be election. And then in 2025, we've got significant tax provisions that are expiring. So regardless of what happens in 24, we think we're going to see significant tax legislation in 25. But I do have some thoughts about 24. A couple other factors that I think are going to be very, very important to watch in January is if, in fact, there was the opportunity for a 24 tax deal, and we'll talk about some of the elements of that, that means that there probably isn't a significant government shutdown. It means that somehow they got to an agreement that kept the government open, that got both sides some level of their priorities, and it allowed the well not to be poisoned. If we're looking at a significant shutdown, I think the idea of a 24 tax package is probably off the table. The other thing on that potential tax package is if you don't do it early in the year, every month that ticks by, you get closer to the election, and you may want to just say, well, if I think I'm going to win or we're going to have more control, we'd rather kick it into next year to see what the product looks like. So there's going to be lots to watch going into January, including, again, the first trigger on the funding, which does not include the IRS. But if in fact that portion of the government shuts down and they don't get a deal, it is not a good indication that the IRS is going to stay open. And that's another thing that we've been talking about for months and months.
Well, we're going to get to the IRS, and Gene, you're welcome just to jump in here.
Sure.
If you have any thoughts and just kind of how businesses are thinking about all this. But one question for you, Mark, just one thing that seems like it's freezing everything is the foreign aid and border security deal. So you've got all of those other elements, and that's like, well, until that's done, can anything else get done?
So productivity in Congress has been at a historic low. So what passes? What passes are the must do, right? Debt limits, government funding, and the supplemental spending packages, Israel, Taiwan, Ukraine, and then the deal would be pairing it with something on border security. The hope is they can either resolve that, potentially maybe they could resolve it in a package that would tie in other priorities. But again, it will be a really good indicator about whether it's going to be a more productive year than the past, with the idea of maybe that if they could get that put together, they could also put together something on tax.
Because that would give momentum. So if you get that, if for some reason they get that done, they compromise, then other things can happen.
It's possible.
I mean, there's two ways that this affects us as CPAs, right? I mean, number one, on the downside, the IRS could be involved in this. So we have to be aware of that. But when I hear that, and we go through this, regularly, that the government is potentially shutting down, that impacts countless small businesses and mid-sized businesses around the country. So everywhere from the delicatessen owner near the government building to the person that wants to get a passport, to subcontractors for government contractors, and indirect businesses that are doing business with the government or people that are related to the government. And I just think as CPAs, like, I don't think our clients either appreciate it or know about this. And I think it's an opportunity and we talked about opportunity before we even went on air. It's an opportunity for us to be talking to our clients and telling them that this is something you need to be aware of. It's a cash flow issue. You need to be talking to your customers that may be withholding payments for you. You need to be reserving cash. You need to be forecasting a little bit further out, because if this does happen, and it could be, for a long period of time, our clients are going to need help managing their cash. And the sooner they know about this and the sooner that we can help them prepare, I think the better. So trying to put a little, make lemons in a lemonade, but
And sometimes people feel it's like crying wolf. The shutdown is always going to happen, and sometimes it does. But Mark, here there are things that the IRS is thinking about, and there's things that the AICPA is advocating, because you had a short shutdown during January,
right,
a few years back,
correct,
but to have a prolonged one,
and
with the opening of tax season.
Historically, the average is up to 20 days. Okay. So we actually haven't had a long one for a while. And it's also obviously the timing. Tax season is very different than other times. Although any shutdown that impacts the IRS is huge because backlogs. Okay, I mean, we just came out of the COVID backlog, and so this is of significant concern. Obviously, we've been talking about contingency planning for this possibility for years. We've talked to Congress constantly. What we've done is the tax division has pulled together actionable mitigation ideas. If in fact they Congress doesn't fund them. The IRS does have a contingency plan. We do not think it's adequate. We don't think that furloughing 2/3 of the employees, although it keeps the lights on, is going to work for taxpayers and preparers. There's no way.
Right.
There are things we believe they can do. There was a lot of funding put in under the IRA, the Inflation Reduction Act, President Biden's signature tax bill, that put $80 billion in the IRS for enforcement. Well, they can use some of that money. We believe they can use some of that money in order to stay open. Sure. The OMB and some of the other agencies have said that they can't. They push back on that. We're pushing for them to use it. We're calling for them to do no furloughs to stay open. Everybody's an essential employee at the IRS. We actually are also calling, if they do a short-term continuing resolution, get it past tax season, get it past, get it to the 15th. Now, those are big debates, but we're still calling for it. You don't be sending out, if you're not open, in order to be communicating with practitioners and taxpayers, don't send out collection notices. And then online services. If you think about like the exponential impact of online versus live, and if you don't have the people to man online, it just snowballs and gets worse and worse.
But we always have to be thinking about the worst case scenario, don't we? And again, if I'm a tax practitioner and I know that we could have this situation in mid-January, I've got right now like almost a month to think about what clients that I have that have major tax issues or policy issues that I might need to be consulting with the IRS now instead of waiting for them to shut. I mean, there are some proactive steps that we could be taking now in our profession before this happens. We hope it doesn't.
Exactly. We're doing everything we can.
And Mark, there's a question that came in, just how with the other funding that was approved, could they use that funding to keep the IRS open?
We believe they can. However, there is a debate about whether, because of how it is allocated and the ability to tap into it, whether they can. As we were going into the last shutdown debate, the indications from the IRS is that they did not believe they were able to use it. We actually think that they can, and we've been communicating to Congress that they should utilize it. We've communicated to them that they should utilize it. We're making a lot of noise early on this because nobody should be surprised if this happens. The goal is that it doesn't. We don't want it to happen, obviously, but we're going to give them things that they could do to make it a little.
So there could be some politics in that too, saying that it'll shut down and then maybe it won't shut down.
There's always politics, regardless of who's in charge of the administration. There's always politics in a shutdown.
So before we're going to talk a little more about the tax deal in 2024, some of the specifics. Is there anything else you want to highlight related to our requested actions?
No, I mean, I think the big thing for the town hall community, Eric, is that we may come back to you. We're laying the table. We're setting the table with ideas that could mitigate some of the harm. We're going to have to watch the politics and how this is going to play out. Again, the first shutdown in mid-January will tell us what the second one will look like on February 2nd, which is the one that hits the IRS. But I could see us, if we trend in that direction, coming to the town hall community to be reaching out to your members of Congress.
Okay, we'll be kicking things off on January 4th. So we have two town halls in January. So Mark, here's a number of the elements. You talked a little bit about that there could be potential if all of a sudden, you get a lot of these other issues resolved, and all of a sudden maybe you'll want to do a tax deal in 24. because you're not sure who will be the president in 25.
So a few town halls ago, I said that there was always the hope of a year-end tax deal, and there was a hope. There was a hope that maybe they could come together with a deal. The foundation of the deal is the Democrats are looking to extend the child tax credit, and the Republicans have some targeted business tax credit and extenders and things that they want to get done. Okay, so that's the foundation. Both sides want them. And they're bipartisan, okay, obviously. So what else can get put into that might be helpful? I mean, we've been working on the threshold for 1099K. We will continue to work on it. The R&E 174, we've been working on that. There's bipartisan support to address those issues. There just has to be a legislative vehicle. So the way 2024 will work, we believe, and I mentioned this, is that if again, they can deal with the shutdown without too much poison being put in the well, so they're still willing to work together, there is enough interest on both sides of the aisles to try and get a package. The problem is if it ticks too far into the calendar year, you get too close to the election, and every month that goes by, you start to get politics injected into this, and then people start to play, well, what about next year? What about next year? So what we do, and this is again, we always position our initiatives for the best opportunity to be included whenever there's a vehicle. And so we will continue to do that. The debates that are going to go on in 2024, regardless of whether they make it to President Biden to be signed, are going to lay the groundwork for 2025. So there will be blueprints that will roll out from the democratically controlled Senate and a blueprint from the House Republican-controlled Ways and Means Committee that will show what a 2025 tax bill will look like depending on who's in charge. So those are some indications of things that we'll be talking about, and then we're going to keep an eye on, hopefully, a deal that they could pull off first half of next year.
Well, Gene, you and I discussed this. I mean, you're thinking about tax advice to your clients right now based on what might happen in 2025.
Yeah.
When you look at this tax deal in 2024, anything that strikes you? I'm sure Section 174 is one of the big elements that you talk to.
Yeah, 174 is right, but the qualified business income, tax deduction is going to be absolutely, a giant one for most of our clients as well. But I mean, listen, the bonus depreciation deduction, which is going away slowly, each year, is a big thing. Research and development, not being able to deduct that in the first year. These are big issues that my clients are talking about. They'd like to see something done with them, sooner rather than later. Mark, I got to ask you, is there any? This is probably going to be a big no, but is there any talk or any scenario where any of these type of tax extenders or changes could or would be part of a shutdown bill? I mean, as
you could argue it could be part of the supplemental funding.
Yeah, supplemental funding, right?
I think that they will probably separate them.
Okay.
And because if the tax discussions tank, you don't want them to bring down a funding bill. Again, the more you add, the more complex it gets. But again, there is bipartisan support, House and Senate, for a lot of these provisions.
Yeah.
It's just weaving it together and having the political window of opportunity, which is impacted by these other debates.
Right. And I don't know if I'm just too negative with my clients, but I am telling them I'm not expecting to see a whole lot done. I think these are going to be big election year issues and are just going to have to wait for after November to see who gets elected.
It's a good bet.
It's a good bet. We like to say it doesn't pass till it does.
That's exactly it.
So now something that has passed, benefit, and we're going to be talking about this more with Lisa and the Aon team shortly, but a lot of talk about this House bill that just passed on December 12th. So latest
beneficial ownership. Again, let me just lay the groundwork here. This is anti-money laundering legislation.
Right.
We are against money laundering. So although we don't believe that FinCEN has done the appropriate education for small businesses that are impacted. It's very unique where small businesses are targeted for regulation. Usually the thresholds are the other way. It's larger. This is small businesses, specifically small businesses, and they are not ready for this. And the fines and the penalties are significant. There is a total lack of education out there. That's why we are pushing back on this. The profession wants to do everything we can to be on the right side of addressing money laundering. Having said that, we have been a significant grassroots push. We reached out to the town hall community, the major firms, the G400, which is the next size firms. We went to each of the state CPA societies in order to put pressure on Congress in order to pass a bill that would give a delay. A bill passed the House on December 12th, one no vote, which could be an accident. We're looking into it. So more than almost unanimous, both sides of the aisle got sent to the Senate. We did all hands, all channels, communication to the Senate in order to see if they could take up that bill and pass it under expedited procedures. We ran out of time. I do think there's still interest in it. Accompanying that, there was a bicameral House and Senate, happened to be just Republicans, of 81 members, that was sent from Congress to FinCEN saying, you have the power to delay this, you should. There is a lot of interest in delay. We are not going to stop, okay? Congress is gone, so we're going to go from a delay strategy to a suspend strategy. So the minute we get back in January, we're going to be talking to all these members that signed this letter. We're going to be talking to all the people that voted for the House bill for delay and say, you help reach out and suspend this until there's appropriate education.
Am I crazy? Like I don't even support suspending this bill. Like I look at this as an opportunity again for us as professionals. I mean, when this comes out, I know I was at a client's office just this past week, and you go into their accounting manager's office, and there was a stack of U.S. Census forms, asking for reporting information that go back a year that they've been, not in compliance with. Most companies, particularly small companies, are going to need help doing this stuff. And we should be like all in making sure that we can provide those services. Not only that, but because they're asking for beneficial ownership and ownership structure information, great idea to consult with clients, particularly prospective clients, on how their organization is set up and whether or not they should consider changing their organization and other tax considerations to think about. I don't know. I'm on this like, don't suspend it, let it come through, and I think smart CPAs will take advantage of that.
I didn't say suspend indefinitely.
Not indefinitely.
And there's a lot. The thing is, and people want guidance on how to implement it. And there's questions. The question coming in right here about a Wall Street Journal article that talked about FinCEN will release the data to just about everybody. So there's privacy concerns, and these are,
of course, there are.
One thing about in America, private companies are private.
Yeah. And when I talk about this to industry groups, and I talk about this, coming up, I mean, you should see the reaction. No one's finding out about my business, and it's another invasion of privacy. Right. And it's all, like Mark said at the beginning, it's being done for the right reasons. It's to stop money laundering. But I certainly sympathize with those, with those points of view. But let's all agree, this is going to happen. It might be suspended for a year, or put off, but it is going to happen. And I just think as CPAs, we should be waiting for information that's provided and be all over it, because we know our clients aren't going to be.
Well, and one thing we're going to have is we're going to have a practitioners panel on BOI. I can tell you there's some people that don't necessarily agree with you. We're going to move on. And
we'll have a spirited debate about it.
We don't need more busy work with BOI, and then we need to get some more answers from some of the people that are guiding us on how to do our practice. And we're going to get into that. We're going to get into that shortly. So, but let's just kind of talk a little bit about some small business trends. Sure. It's great, Gene. You've been participating in this discussion since the start. Just for the audience here, I think you all know Gene Marks is. He's very prolific, huge contributor to a lot of business and leading newspapers in the United States. He also runs a firm. Yep. He runs a 10-person firm, and he's also out there speaking to firms and clients. So just great perspective for our town hall community. And what we're highlighting here, it's always good. People like. We actually had a recent focus group on the town halls. They said, hey, you should bring back what you spoke about and see, where things stand today. So here, Gene, this is what we spoke about with you on July 13th. Yep. And this is what we're going to talk about today. Yep. 21st. So first off, it was sticky. The inflation outlook. Look, I haven't checked the markets too much today, but things look like they're settling down a little bit.
When I speak to groups, when I talk to my clients, and whether they're manufacturers or distributors or whatever, and they hear from the media saying, well, inflation is down, it's now between around 3%. No one is arguing that, but there are a lot of raised eyebrows because it's disinflation. I mean, we still have inflation, and it's above 3%, and people are grappling with that. Most of the people I talk to, most people are running anywhere from construction firms to manufacturing or service or whatever. They are still dealing with price increases, Eric and Mark, that are over they're in double digits to what they were just a couple of years ago. So when you hear the narrative that inflation is going away, it's decreased, but it is certainly not going away. And throughout 2024, we're going to continue to have to deal with it until it gets down to a more reasonable number. So we're going to continue to see sticky inflation this year, and people are going to continue to complain about it because it's an issue.
So many of the small businesses probably haven't caught up with their pricing, with the 20% of supplier costs that have come in. So that brings us to kind of the economy. Do you feel like there's headwinds out there?
Yeah, there are. To me, the economy in 2020, and I just wrote about this in The Guardian. Last year at the end of the year, I wrote that the thing that's going to be the biggest impactful, it's going to impact businesses the most will be interest rates. And that was a year ago. And I think that has been true this year. In 2024, it's all about the consumer, guys. It is all about, and when you look at GDP in the third quarter of 2023, it was 5%, very strong. 70% of that was coming from the consumer or inventory buildups for consumers. Right now there are some headwinds. I mean, I think the holiday shopping season is going to be relatively good, but already we're hearing murmurs from the CEOs of retailers that they're seeing some breakdowns in consumer spending. Some of the major bank CEOs, Jamie Dimon is a perfect example, who is saying that they are seeing more credit card delinquencies. Auto loan delinquencies are at a 30-year high right now. The housing market is very, very tough, which impacts so many businesses as well. I just think that consumers themselves, if they start pulling back, and I do believe they are going to start pulling back, it's not, how long can the American consumer keep spending money? Where's it coming from? That's going to be the story.
The American consumer, the American economy, it is leading the way in the world, and it's great to see. But just back to the economy in particular, one thing that does drive consumer spending is the labor market, and we've been hearing even just over the last week, some related to the profession, layoffs. And then that obviously, goes into, making, factors related to how tight the labor market is.
I am not as concerned about the labor market because we will have tight labor throughout 2024. Bigger companies, I believe that they've been laying off tens of thousands of people throughout 2023. And my feeling is, and my research is that a lot of them are cutting the fat. They had a lot of excess employees from COVID that they kept along, or they overhired. There is still between 9 and 10 million jobs open right now, and the vast majority are small firms that are looking for people. I go to my clients. Maybe they wouldn't take anybody off the street like they would have probably done a year or two ago, but they have job openings where if the right person comes along, they would absolutely fill it. Most small business owners know that people are their most valuable asset. So even people that are getting laid off by some of these larger companies are going to be finding employment. And I just don't see a huge weakening in jobs in 2024.
So small businesses, labor market is still tight. Larger businesses, step back a little bit on the hiring.
There are so many benefits to working for a small business. I think they'll be able to attract people.
Well, that's another discussion that we had prior to today was about benefits.
Yep.
And I want to highlight a slide that was in one of this was a recent article that you wrote.
Yep.
And what you're hearing about is this focus on benefits. So take us through the big three items here.
Well, I just, if you're running a business, I'm not a labor expert or, an HR person. I'm just reporting to you what the people I interview and my clients and my community. So this is what they're doing in 2024. Core benefits for employees, what they expect. They expect healthcare insurance. They expect retirement and savings, retirement benefits, and they're expecting flexibility. On the healthcare insurance side, there are some trends. I mean, people get HSA accounts. There's been a big bump up in health reimbursement accounts. Been very, very popular. And some of my clients replacing their health insurance programs with straight HRAs because it takes them out of the insurance game entirely. They say we're going to give you the money, you get your own insurance, somewhere else. And then, captive insurance companies, it's a self-insurance for smaller businesses have also, I've seen a huge interest in that and a huge increase in that this year. On the retirement side, because of Secure 2.0, which passed last year, there are significant reasons for every business to be offering some type of retirement program. So that is something that can't go away. And remember this year, employers can start matching student loan payments by putting money away in people's 401k accounts. That's a huge benefit that should be offered. But flexibility is the biggest thing. And we were talking about this before we went on air. It's the work from home debate and all. Employees expect flexibility, and we as employers, whether we're running CPA firms or we're a CPA at a company, we have to have some type of flexible work program. They love to hear 4-day work weeks. I have many clients that consider a 10-hour workday to be a 4-day work week, and that's fine because a lot of professions do that, and it's a great way to say to younger employees, yes, we offer a 4-day work week. They're just 4 10-hour days. Unlimited PTO has become very, very popular, and you can control it. And allowing employees to work from home has just been also another big thing. So those are the big three, Eric. It's just healthcare, retirement, flexibility. We have to be offering them as business owners.
Well, a couple of weeks ago at Digital CPA, I had Carla McCall on stage with me. She's the vice chair of the AICPA. She's the managing partner of a top 100 firm based in Massachusetts. And your flexibility items that you're hearing from a lot of businesses, those are things that she's focusing on. I mean, so this is something that I think we need to further discuss. What is unlimited PTO, the 4-day work week, and remote working. Remote working, you here in New York, a number of businesses are saying that's come to an end. But it's going to be a mixed story.
Yeah, and there are some people that say no, our employees have to be in the office. We have to realize that 50% of the employees that are out there now, more than 50% right now, are either millennials or Gen Zers.
Right.
Never before, by the way, have we had so many generations working in a business. We have the boomers, the Gen Xers like me. We have so a lot of different people have competing priorities. Flexibility, though, is one of these common themes across all generations. I mean, even the boomers love it.
Yep.
So, and I'm not saying that you have a fully remote office, and I'm not saying that you force everybody to come in the office every day. And I also think that when some employees complain that they can only work from home for 2 days a week, I do say to myself, like, you would have killed for that opportunity back in 2017. So there is a middle ground that can be reached. But I think every employer has to have some type of work from home policy and allow that flexibility. Because it's a work-life balance. And I think younger employees are smarter. They realize that it's important.
And there'll be techniques. I mean, working remotely is a privilege. It's not a right. You have to have responsibilities related to it. So I think this is, it's something that we're going to now be bringing Lisa Simpson up. Something that she thinks a lot about. Leading the firm section at the AICPA. So Gene, we'd like to keep going.
Sure.
This has been a perfect, lively December 21st live discussion with you. Great to have you here in person with us in New York. Look forward to having you back sometime soon.
I'll be back next
best
quarter.
wishes to you.
Thank you, Eric.
For a good new year and a good holiday.
Thank you, everybody.
Thank you. So Lisa, with that, pretty much on time here. And just when you wanted to, bring some news, you told me that don't get to you before 3:30 due to a release that you want to provide from the IRS.
That's right. Thank you. A week ago, I had about one slide in my technical update, and in the past week, I've ballooned that to a lot more than one slide. Here's the heads up, y'all. I'm going to go fast. I am going to spend time on ERC. Then you've got some slides in your download. So make sure you download the resource slides today, because I'm going to hit things super fast other than ERC, because we've got a really good conversation around BOI that I want to get to with plenty of time. So let's get started. Employee retention credit update came out this week or last. I apologize. I don't remember what date exactly. But the IRS announced that they were sending out letters to about 20,000 taxpayers that basically said they were disallowing ERC claims that had been filed. Now, here's the highlight on this one from my perspective. They went after some low-hanging fruit. They went after claims where they said the entity didn't exist during the pandemic period, or the entity didn't have employees and was not paying wages during that time. So let's give them that one. They expect to release more letters in the coming weeks. So just be looking for more of those. If your clients are getting those, don't be surprised. Well, hopefully you'll be surprised. So now we have some breaking news. If you remember, the IRS announced a few weeks ago about their withdrawal program, and they also said that they would be having a voluntary disclosure program. Today, about 5 minutes ago, the IRS announced some of the details of that employee retention credit voluntary disclosure program. I'm going to read from my notes so that I get all of the highlights. If we can go back a slide, that would be great. So just announced is the voluntary disclosure program. This is a limited time only offer from the IRS. It is good through March 22nd, 2024. And they have announced that there will be an online filing program for taxpayers who believe that, on second thought, they filed for ERC, they've gotten the refund, they've cashed the check, and now they're thinking, maybe I wasn't entitled to this. They are offering a voluntary disclosure program that provides that taxpayer a 20% discount for filing online and raising their hands, and that is a 20% discount in the payback of the ERC. There is no interest and there are no penalties. If a taxpayer needs an installment agreement, that will be available, if the taxpayer qualifies through the online application. Again, this is only online. Be looking for form number 51434. The IRS has announced that they will be issuing FAQs on their site either today or tomorrow. There is so much more to come on this. Our advocacy team has been working with the IRS, and we're going to have questions. You're going to have questions. We're going to need resources, and we're going to be working on all of that. This is truly hot off the presses, so I don't have a lot more information than that just yet, but be looking for that. One interesting thing is that they will be asking taxpayers who filed this online application to provide the information of the ERC preparer. So who provided the information that was used to submit the claim. That is optional, not mandatory. Again, that's all I have right now. Be looking to the IRS site for those FAQs. And again, know that we'll be back in touch with you in 24 as soon as we get more information from the IRS, and we'll be trying to answer your questions. All right, so now I'm going to move through some slides really quickly. The next announcement that we have from the IRS was around penalty relief for certain taxpayers who were not getting automated collection notices during the pandemic. So for 2020 and 2021 filers, we had advocated that assessment collections stop. So now the IRS has come back out and announced that they're giving about $1 billion in penalty relief to approximately 5 million taxpayers. There's a great Journal of Accountancy article that I've linked for you. You can also get details in the notice that I've hyperlinked as well. The next one, really high level, just wanted to call your attention to the fact that the IRS has expanded their online business tax account reporting process. So previously, only sole proprietors could create these online business accounts, but now an individual partner of a partnership or an individual shareholder of an S Corp can gain access to these online accounts. Again, I'm going to point you to that great Journal of Accountancy article that will give you the details of who can access these online accounts and what forms are available through that. Other IRS news, just to hit quickly, the IRS announced that there were restructuring some of the key leadership positions. We just wanted to call this to your attention because it is not, we don't expect that it will impact you as a tax professional on a day-to-day basis. IRS is simply moving for increased transparency and efficiency as they look to modernize their operations. Quick hit on announced new mileage rates. And then interim guidance has been provided for those very few corporations with over $1 billion who are going to be subject to this corporate AMT. So There are other slides in your downloads. So again, download the slides from today, and you're going to get some insights into some accounting and auditing updates and a recent DOL report. But with the ERC announcement that was coming out, I just wanted to spend more time on that. That's a great reminder for me to plug an upcoming AICPA member benefit that launches in January. It is our ANA Focus webcast series. And on the January episode, which is January 10th, I believe, we will have the chair of our Employee Benefit Audit Quality Center on that webcast to talk about more in-depth insights around the Department of Labor study of CPA firms providing ERISA audits. Okay, I'm going to take a 5-second breather, and then we're going to move over into beneficial ownership information reporting. I am so glad that Stan Sterna with Aon and Sarah Ferentz with CNA have joined us today, because BOI has been such a hot topic, not only on town hall, but in community forums and in the emails that I'm getting. So lots of questions, lots of confusion. I'm going to level set it all by saying up front, we don't have all the answers. This is an incredibly fluid situation. FinCEN has just announced today, they've reiterated that they will have the form available January 1. So none of us on this call, none of you in the audience have even seen a form. They just announced today the second set of guidelines that they needed to provide around access and safeguards to the information that's going to be provided. This is all basically establishes the framework for access to and protection of the information that we're going to be reporting. That will be effective February 20th. This is all breaking news. They will begin to provide access to BOI in phases to authorized government agencies and financial institutions that meet the requirements of the rule. We still have not seen a third rule, which is required around customer due diligence. So many unanswered questions, don't have a form, haven't seen the platform. My message to you to begin this conversation, if you're in the audience, is don't panic. So with that, we'll hit the highlights. I'll just do a quick reminder on the next slide of some of the key provisions of beneficial ownership information reporting. We talked about it in the beginning. This is around anti-money laundering. The deadlines for entities in existence on January 1 to file their form is the end of 2024. So you've got that period of time for us to wade through some more questions to get additional information. New entities created in 24 have 90 days to file. So a little bit more urgency there, but I think if we take a step back, that means that nothing will be filed theoretically prior to March 30. So again, let's take a deep breath and let's get started into the conversation where we will attempt to answer some of your questions around risk management practices and considerations. And that's where Stan and Sarah come in. They've joined us in the past, and I'm so thankful that you've come back to have this challenging conversation with us. So with that, if we can move to the next slide, let's start with a conversation about what risks exist for CPA firms in this fluid beneficial ownership reporting environment.
Yeah, thank you, Lisa. And I think really there's two main risks. One is what you indicated earlier. There's a lack of awareness with the CTA in compliance. So one thing we're concerned about is we see a lot of claims where someone will say you failed to advise. And the risk is FinCEN finds that there's non-compliance. They assess penalties, and then the business owner comes back and blames the CPA for, I expected you to advise me of the existence of the CTA and the potential penalties, and you failed to do so. So you're at fault. The other is off-the-cuff advice. The advice, it's a very fluid situation. So There's going to be a lot of holiday parties. People ask questions. They might ask an off-the-cuff conversation or question about FinCEN, how it applies if it's a client. And the concern is that they're going to provide inaccurate advice as to the requirements, what it provides. And again, as we noted, it's a very fluid situation. So, there's two, I think, key risk management practices that folks should consider to avoid these type of risks. One is to notify your clients, create that awareness. Do that either through a newsletter or a letter. I know that the AICPA tax section has a template letter that folks can provide, CPAs can provide to their clients. We also get into this in our risk alert, and we'll be getting into this in a January Journal of Accountancy article about how to manage this risk. The other thing is engagement letter language. So unless you're specifically engaged to provide CTA compliance assistance, we're recommending that in all service offerings, whether it's a test, tax, or consulting, you provide disclaimer language that defines the scope and defines the expectations and notes that with this specific engagement, we are not providing CTA compliance assistance. And in that way, you're avoiding the expectation gap or the expectation from the client that you were going to address these issues. That disclaimer language is also specifically in our risk alert, which I can see the link on the slide. And as well, it'll be addressed as well in the Journal of Accountancy article next week.
Let me jump in real quick because you've thrown another acronym into the conversation. This is the great, is it ERC or ERTC debate? CTA is the Corporate Transparency Act, which is the act that created the Beneficial Ownership Information Reporting Requirements. So if you hear us use CTA, we mean BOI and vice versa. So I want to call out the hyperlink in the slides to the risk alert. It is an incredible resource for you, and we will also include that in the Town Hall's newsletter that you'll be getting as well. So I love here's always the risk, and then let's move in more specifically, and let's talk about specific risks as it relates to BOI, because I think there is a perception that firms aren't supposed to provide this service at all. So, Sarah, I'm going to turn this one over to you, and let's talk about BOI specifically.
Sure. Thanks, Lisa. And I'll first start with the decision to provide services related to BOI is really one to be made by the individual firm. Our role is to help advise on risks that are applicable. But ultimately, it's the firm's decision to decide how to proceed based on that understanding. So, that decision is made by an individual firm based on their understanding and assessment of applicable risks, and then their own risk tolerance and the strategic direction for their firm. We outline a number of risks that are applicable to these services that are in the risk alert. We outline it in the risk alert in greater detail. But I think it's also just important to emphasize that it's at the decision is at the individual firm level, and different firms may reach different conclusions based on what they think is right for them and for their clients, and that's okay. Putting and we also know that there's a lot of uncertainty and a lot of unknowns right now, and a lot of people are looking for bright lines, yes or no, wanting to have that certainty and uncertainty. And unfortunately, as Lisa said at the beginning, there's just a lot of fluidity here, and we don't have all the answers, or we would share them if we did. So I think it's also important to emphasize that CTA is new and it's untested, and there's going to be more things that are known as it is rolled out that will help inform other decisions later in the year. But it's different. It is not the same as assisting your client with the FBAR or assisting them with a PPP loan application. And so because it is different, it does bring about a different set of risks to consider. And like I said, those are all outlined in that risk alert that was hyperlinked on the previous slide.
Yeah. And, you know, in talking with firms and looking through the town hall Q&A and looking at community forums, there is oh, heck no, I'm not going to do that. And then there are the other firms who are like, my clients expect me to help them.
Yep,
And
we've heard that too.
And I will, you know, I will help them. I just need to know what the risk considerations are, and I need to mitigate the risk. So let's take that into the next slide, which is where we start talking about some of those more concrete risk mitigation strategies. I'm going to go ahead and throw out, let's talk about the elephant in the room. Where are we on accounting firms providing BOI services and whether or not that is unauthorized practice of law? What's your take? And then I'll give you mine.
You know, I think it's the unknown, right? We don't know of any state bar association who has said in writing that providing services related to CTA is the unauthorized practice of law. We also don't know that it is. So we don't know if they're going to say anything at all in writing. I would not rely upon anything unless it was in writing. You know, but I think there's, again, that is one of the uncertainties that exist and will probably continue to exist.
Yeah, I would only add, Lisa, that to date, we are unaware of any state bar that has made any definitive written statement on their policy.
And I'll reiterate what Barry said on our last town hall is, you know, this is a state by state decision. It is the state bar, not the accountancy state boards. And if we are informed that a state has made the decision that this is UPL, then we will certainly press on that and work to resolve that, because I think that this is such a facts and circumstances situation. You might have clients with a very simple ownership structure, and they know very clearly who their beneficial owners are, and they can very easily provide clear information, and there's no consulting, there's no advisory, there's no what does beneficial ownership really mean. It's a very straightforward circumstance. So again, we will continue to keep our eye on that and come back with any information that we have. So if a firm does decide to offer BOI reporting for their clients, let's talk about some of our good old standbys in terms of risk mitigation. So Stan, I think you were going to help me with this one.
Yeah, I just wasn't sure if Sarah was going to address consulting with an attorney. That's one thing that we suggest is, you know, initially consult with an attorney. So figure out whether or not, you know, a counsel has advice with regard to whether or not you're going to, or they have an opinion as to whether or not it's unauthorized practice of law or whether it's something that you should consider.
So
next is sort of
because even if, so we've just said states haven't made any determinations that we've seen in writing. So what's the outcome of that going to be? Is this just a CYA to put in your file that says, hey, I asked? And what if I'm a sole practitioner and I don't really have a regular relationship with an attorney? Then what?
Yeah, I can take that one. It is a CYA. I mean, you've at least taken the step and asked the question and made those inquiries such that if there is a claim or an allegation that you performed the unauthorized practice of law, then at least you can point to the diligence that you and the steps that you undertook to arrive at the conclusion that yes, you could proceed with providing services to your clients related to CTA, and that does provide you some defense. With regards to those practitioners who don't have an attorney on standby, most state bar associations have hotlines that you can call to obtain an attorney referral. So if you don't need it for CTA, that's not even a good resource if you need something, need an attorney to review an engagement letter, for example. That's just another great resource that you could reach out to and call upon.
Okay. All right.
So
Thanks.
Lisa, Lisa, you've been doing a great job directing this conversation and asking questions. We've got 154 questions that have come in. Jean started it off. A lot of people saying, yes, I want to have these questions answered before I decide to provide the service. We only have a couple minutes left here. One, broad question is, so Stan, and Sarah, we're giving advice on the best practices here. So from a professional liability standpoint, if the firm goes through these steps, is there professional liability coverage?
The coverage is dictated by the terms and conditions of the policy language. So that would be something that you'd want to consult with individual carriers to determine.
So Eric, I know we don't have a lot of time left, but
Aon and CNA just cover. How would you? There's direct questions on Aon and CNA.
And those questions are discussed in the risk alert, and I would point them to that.
So Eric, since we don't have much time, I do want to hit on the engagement letter, because we get a lot of questions about, do we have an engagement letter template that we can provide? And, Stan and Sarah and I have been talking a lot about this. We don't have a form. We don't have access to the reporting system yet. So it's been really tough to get very concrete into an engagement letter template, but that is in the works. Once information is available, we will certainly be providing an engagement letter, but it's going to take a little bit of time, which is why I want to go back to the opening comments about don't panic. Your existing clients that have until December 31, 24, and new clients new entities have 90 days.
Well, Lisa, this brings us to open forum, and it is. As I said, and I kicked off today. It's been 4 great calendar years working with you here on these town halls, and today's nothing different than what we've experienced in many other town halls. We don't have certain information. We have the best available information. We have a lot of people that they want clearer answers. We want to give clearer answers, and we don't even have the form yet. So in some ways, the form needs to come out, and when the form comes out, we will analyze it. Mark, we only got a couple minutes. We're going to end on time, but I'll say, Mark, the thing here is, and we are doing advocacy. So we hear the 154 questions. We'll take that. We are giving the feedback to the policymakers. Right. And this is just a process. And again, thank you for the participation.
Yeah, no, it's a real-time process. So, they're going to get this is the first thing they're going to hear about when they come back in the new year. I said we moved from delay to suspend. We're going to seek to suspend it, BOI, until we can get some of these things answered. We've got to prepare for it to go live, but we're going to continue to push.
And Mark, we had someone from FinCEN on who said, they want firms, trusted advisors helping small businesses. So this will be an ongoing discussion. Lisa, you and I do have some closing remarks, but is there any, I know you just were taking a look at the question set. Is there anything else that you'd like to add here?
I can't keep up with those questions, Eric. They're coming in 100 miles an hour.
So, well, let's thank Stan and Sarah. We will be continuing the discussion with you. Your risk alert, your information today is very helpful. So thanks for being with us. Look forward to having you back in 2024.
Yeah, thank you.
Our pleasure. Thank you.
Okay. Thank you, Mark. And Lisa, let's just, we've got not much left here. Here's some additional resources that have been launched over the last couple of weeks. We haven't even mentioned Gen AI. That's one thing. Everyone's getting their artificial intelligence alerts. Right now it's changing how businesses function. We've got this great toolkit that we released. Maybe that's something you can look at over the holidays. More information on kind of the evolution of the client advisory services practice and some of these other resources. Good reading as the year closes out. We're going to kick things off, Lisa. Live together at this firm meeting. Barry Melanson will be back with us. Mark will be with us. Jeff Weiner, who's the CEO, managing partner of Markham, will be with us, and we'll be talking about the outlook for 2024. And we're definitely going to be talking about many of the topics that we covered today. Lisa, it's great being with the town hall community. You and I had the opportunity to be with many of them over the past month. thank you for your participation through 2024. We really do wish you all the best for a safe and happy holiday. And we look forward to being back with you in the new year. Lisa?
Just hope everyone gets some time to unplug, rest, relax, and recharge.
Well said.
Yes, we'll see you in the new year.
See you in the new year. Thank you.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.